All right, ladies and gentlemen, I hope you had a wonderful day. We have Marxists in the White House, or at least according to Ted Cruz. I know this is a wild title, but this is where we have to start because I think it encompasses the day very well. We saw another day of talks breaking down, still no outline at all or base agreement on the debt ceiling, and there was a bunch of retweets by McCarthy and videos and all of that, but here's the kicker. The stock market actually moved today, and honestly, I'll tell you, I don't think any of the headlines today were any worse than the day before, but again, the market finally reacted, and it's actually taking you right back to the level when all of this optimism started last week. So, Chad, we have a lot to talk about. I have a breakdown for you. We even got to be looking ahead for tomorrow in the Fed minutes as well as the rest of the data, but the debt ceiling is starting to heat up, and now we are entering the middle of the month or the middle of the week after we thought we'd have it outlined by Sunday night. So, Chad, it's getting very interesting. The bonds and gold, it was also interesting. It's going to be wild, so I need you to drop your thumbs up. I hope I see you on stream, youtube.com/thestockmarket, but let's get into it. I'm going to give you just a quick rundown of everything. We started the morning, remember, last night. We got the updates, Biden and McCarthy. They took the default off the table. I guess they spoke it into existence. I'm declaring bankruptcy, but that was the news yesterday. It pretty much all faded by the morning. There was bad PMIs out of Europe. That was not good. And then LVMH, Hermes, all the luxury retailers, they finally had their bad earnings this whole time, this last year or two, even when everybody else was declining. A lot of people put a lot of faith into the luxury brands, and well, they had bad earnings today. Mix that into even Target, even Lowe's had bad consumer earnings today. That wasn't good, but again, I mean, we've seen the market handle this before, but that's how we started the morning. We even throughout the morning, even after pre-market, all of that was the pre-market. But without that, we also had home data. Real estate data was pretty much 50-50. Then the manufacturing data, that actually came in pretty bad, but there wasn't any new lows, so you could take that how you please, but there was all of this, and then this is where we get into the good stuff because we just started dropping for no reason at all today. Powell entered into that meeting. We literally had no headlines from it. Just note that we weren't able to listen live, nor did we hear anything from it. All we heard is that he walked into that, and they said it was a pre-planned meeting, but he wasn't there for the debt ceiling. And then we started hearing about them going into the talks. Then the talks ended. We were already dropping before that. This was the talks between Biden's negotiators and McCarthy. Then McCarthy starts tweeting. The Republicans came out. This was all during here. Again, Ted Cruz was saying there's Marxists in the White House and that it's the 25-year-olds and the 30-year-olds on the White House team who are controlling Biden, who are making the decision. He pretty much said we're going to default on it. Then even Bloomberg, they came out with an article saying how Republicans are even doubting the math on the X date, and they're saying that, Yellen's X date is wrong. We have more time. And just to give you an idea of why that's not good, is if you even have them arguing about when we're going to run out of money instead of arguing about the solution, I mean, that should give you an idea of where we stand at this point. But again, a lot of the rhetoric heated up, and that's the point about today. You couldn't really pinpoint it to events, but this was all happening, and we finally started dropping. And with all of it, I was telling you to watch gold and bonds, and although they did go up intraday as we were dumping, I was saying this all day today, this wasn't really a reaction. They are still down, and ironically enough, the equities actually have moved more. We are pretty much back to the middle high of Wednesday or when we started to break out, but go look at the close of Wednesday on gold or anything like even bonds, we're a lot lower. So it was an interesting start. We finally had a reaction. That was everything that we dealt with in the morning, and now we're waiting for stuff tomorrow. But like I'm saying here, there was not any worse headlines than the last couple of days. The only real difference is that we have now reacted negatively, and now we are back below that optimism level. So this is something that we brought up on stream, and what I mean by the optimism level, if you are watching even the watch list, I was telling you last week, I didn't think things were going to move. I thought we were pretty much going to stay pinned in this range, and we haven't really broken above 41.58, even 41.78, 41.80. None of that really happened for most of the year, even though things have done good. These are relatively highs for January or even for 2023. So I was saying anything above like 41.80, even 41.55, you really haven't been there. That is the optimistic level, especially when we were getting optimistic about the debt ceiling. We were going up. No bad news could bring you down. But ironically enough, even though the hedges didn't go up, and even though none of the headlines were any worse, you're now back below that level today. So that's what I thought was interesting, and that's where now we're going to play moving forward. But that's the first part, and now, like I've said, I've kind of hinted at it, the hedges didn't move. Gold and bonds, they did not move, and they were moving intraday, but you're not really seeing that reaction. And now I hope this highlights the point, whether you liked it or not on the first half, but the last couple of days are now showing equities are much more willing to swing larger during the process, and that's hopefully what we want to see. It may bring about a speedier resolution. I'll explain why, but when it's all said and done, though, now, just keep in mind the stocks are going to get really jumpy on good, and out of nowhere on the one day the bad news finally compounds, or just when the good runs out, or who knows. Again, today was an interesting one. You may finally start to see that negative reaction, but everything else is relatively calm. So we got to see how it moves forward. But now this is what I'm saying about the back end now. We got a couple of things that we need to be looking out for tomorrow, but the interesting fact that we had a reaction today, we want to see if the stock market gets involved. That is what we've been saying since we've been talking about all this, is that eventually the market will start responding to all of this, and hopefully that pressures lawmakers to finally start reacting as the consequences become a little bit more real in this back and forth. So that's what we got to be watching for tomorrow. But now, like I said in the beginning of the video, we still got a lot of events this week. We have the minutes tomorrow, and I would be watching that to see if it feeds, or if people want to feed the pause or skip narrative, and then weigh that against the backdrop of anything debt ceiling related, or see if the minutes actually are more hawkish than initially received. Again, Powell, I didn't really like it too much. I didn't think the language was too clear, and I thought he was kind of towing the line, but people want that to be the pause meeting. That is the going consensus now, that was the pause. If there's going to be a surprise shift, that could show up hawkish in writing on the minutes. So we'll see, but that's a low likelihood, even another low likelihood. But this would be the only other new piece of info we'll get, is just watch if there's an explanation of why they changed the language. Remember, they added to that phrase of, the additional firming, and they kind of remixed it a little bit. So that's what we're going to be looking for. But now, like I'm saying, let's see if the market responds to the debt ceiling. And now the thing about tomorrow, even today, we didn't really watch the hedges move. Again, they moved throughout the day when the market would go down, but they are still lower. You don't really see fear if those aren't getting back to those prior levels, even if equities go down. I know, very interesting concept, but the thing about tomorrow now, the minutes, depending on whether or not we get new information, that has the potential to move the bonds, and then that could distort some of that little bond fear hedge, because now, depending on the policy, people may react with the yields, and then depending on the fear, people may react with the bonds and yields and all that. So we'll see what happens. It's going to be wild. Watch for any updates. Again, we got it all live, youtube.com/the stock market, but let us get into the plays. So I got more plays for you. I hope you're ready for it. We're starting with the same play as yesterday, Pfizer. The Ozempic news, it had follow through. I am still riding the shares, and maybe I'm getting a little greedy on it. We already got like $2 a share on it. It's a pretty good return. It's very weird that not weird, it's just, again, a big piece of news that moves a small mover like Pfizer. So if this streak continues, that could be good, but now we're just going to watch to see, one, if the news plays out. That's what I'm watching for. And then today, I want to see if it gets a value bid. As we started to kind of dump throughout the day, Pfizer was catching a bid. Pfizer has been sold off a lot throughout the beginning of the year. We even had news apparently, too, that Biden is trying to get vaccine funding as well throughout some of the negotiations. So that could be another reason. But for the most part, Pfizer got the Ozempic news, and then just take a look. Even in January, even end of last year, they were at $54, and then they got absolutely murdered. So very big volume 2 days in a row. Want to be riding it through. I really, really like the news. But now, too, given the fact that it's down so much, if we do start dumping, sometimes the names that got really, really sold off, they'll get a bid, and then it kind of balances out. So that's what I'm going to be looking out for Pfizer. Still holding the shares. That's play number 1. Then play number 2, we didn't take a play on it, but we called it out as we saw it. But Netflix, they came out with an update today on the password sharing. Apparently, they're going to be sending everybody an email, and there's been a lot of moves lately. Again, we heard about the advertisers. They had that big pop, and now they're talking about the password crackdown. But here's the thing, the password crackdown, it's a split opinion. Some analysts like it. Some analysts hate it. I think it's the same thing for everybody. Some people, you're like, I own the shares. I love it. I hate you, Netflix. I'll never use you again. So let's see what the articles say. Again, you may even get a social reaction to this one, but I think it's going to be a good one to watch throughout here, and then we'll see even how they react to the volatility kind of being one of these tech stocks as well, too. But that is going to be play number 2. And then finally, I already gave you this one. We still have these plays /ZN. Remember, I'm using the options on these futures. That is my insurance play. That's pretty much my debt ceiling play. That's the thing. I think a small amount of money on that play. If anything pays out, you are good to go. So I don't know if you see it here. So this play right here, again, I have the options. I have August 119. So if you didn't know that, futures, they have an option chain as well. Maybe some of you shouldn't have learned that. But anyways, but here it is over here. But I have these plays. I'm down $200, and that's pretty much the main point. Watch for quick pops and drops tomorrow on the minute in terms of the bond yields. Again, that could distort things, but watch the premiums on these options. If the premium doesn't go up and I'm still down on that play, I don't think people are tripping out, and that's what I'm going to be watching as we navigate through this debt ceiling fiasco. So we'll see what happens. Those are the main plays. Besides anything else, I think I sold out of a Square, flipped the micro ESs a couple of times, and then I think that's it. Oh, yeah, I cut out of the Target. We had the Target LT tinfoil play. We would have done a lot better with shares, but I sold out of that one for like a $400 profit. So we'll add that to LT's commission. But that was pretty much it, Chad. I think it's very simple moving forward. Maybe the minutes give us a little extra and distort things. Otherwise, we're breaking it down to the wire. And remember, any deal that gets agreed upon has a 72-hour period to review. So mix that in with the clock, or maybe we have more time. We'll see what happens. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember there's levels to this. I'm not saying to the upside. I'm saying there's levels to failure. Everybody could go down the same route, but once you take that first turn, there's a lot of ways it could branch out, baby. You could bounce back in many ways. How you define it is up to you, and maybe I should be spitting this philo to Congress right now. I don't know, baby. I don't know. We'll see, Chad, but I'm going to see you in the morning. I hope you're ready. Middle of the week. You even got cold real estate tomorrow, but we're going to see how it is, Chad. It's great. You don't see me. I'm not even awkward. I can't be awkward if you see me, huh? No, okay, still awkward? I'm sure you could probably imagine me. Right, okay, horn.